Remember the last time you were absolutely certain a stock was going to go up? You bought those juicy call options, ready to double a port, then watch a stock tank 5% off the open and your contracts turn into dust. 3 years ago, I lost $3,000 in a single day on SPY calls. Not because I didn't know what the Greeks were behind options, but because I had no idea what an A+ setup was. Look, here's the uncomfortable truth. 90% of retail traders fail, not because they don't understand what delta means, but it's because they're not focused on the right setup. When you're brand new to trading, you'll ask someone, and everyone just tells you, just stick to A+ setups. But I remember thinking to myself, I heard the same thing. I spent all night wondering, well, what is an A+ setup? Can you just show me one? So, lucky for you, today I'm going to share with you what an A+ setup is, how it works, and how you can finally use it to start growing your trading account. This is how to spot A+ setups and have the correct daily buys. What is an A+ setup? A+ setups are high probability, 90% win rate, okay? They're going to meet all the criteria, has trend structure alignment, okay? On an A+ setup, that's when you increase your size. They happen infrequently, okay? They don't happen all of the time. And the candle structure is ready. What A+ setups produce? 220%, $3,000 in gains, 122%, 205%. Notice, these are not 20% scalps. These are A+ setups that you hit with big size and hold. What A+ setups can do for you? 322%, a $30,000 withdrawal, okay? That's literally half of someone's salary, all trading A+ setups. Now, before we begin, I have a question for you. What is the best time frame to find A+ setups? I'll give you a few moments to look over the answers, but before we begin, please make sure you like and subscribe. The best time frame to find A+ setups is none of the above, so it's a little bit of a trick question. So what is the best time frame? All A+ setups derive from the daily chart. It is essential to understand that. Why is the daily the best time frame? Okay, it has the largest amount of data. Think about it. Each day contains a day's worth of trading data. It takes hours or days to form, okay? It takes days for it to set up. It represents how investors are feeling that day. And stocks take days to move, not minutes. The moment I understood that stocks take days to move, not minutes, is when my portfolio really hit the gas. Stocks take a while to move. They're slow, they're old, okay? They take time to move. Now, remember back to the last slide where I said it takes days versus minutes to move. On the left chart here, I have a daily chart. On the right side here, I have a 2-minute chart. And I want to emphasize how stocks take days to move. Here is the daily chart, okay? If you played this flag breakout on the daily chart, you made money buying calls for 30 days. On a 2-minute chart, 1, 2, 3 candles of gains, okay? You made money for 6 minutes. Now, I'm pretty lazy, okay? So I want to just make money for 30 days and at the end of the month wire out versus stressing out for a couple minutes to make 6 minutes worth of gains. Do you want to make money and get paid all day, or do you just want to get paid for 6 minutes? Let me know in the comments down below. Let's dive into some background. Okay, so this is a daily candle here, and we can see we had the previous day high and the previous day low. All it is the high of the candle right here and the low of the candle. Now, let's get into the sauce. On an inside day, the current day, so this candle right here is the current day's price action is in between the previous day's price action. So this is what's going to look like on the daily chart. Notice the action, okay, if I was just to draw a little squiggly line, is in between the previous day's action, okay? Notice how it's in between. It's inside, okay? It's in the house. It's not coming out, but once it gets out of the house, that's when it gets fun. If you watch any of my videos before, inside days are notoriously choppy, okay? They go up, down, up, down, up, down, up, down, up, down, or some say the ping pong, all your gains are gone, and it looks like a Gucci snake. I love Gucci, but I don't like trading Gucci snakes. Now, here's an actual example of intraday price. So it's forming an inside day. So here's the previous day high, the previous day low, and the current day's price action. Notice all it did is ping pong all day. There is not an edge in this type of price action. You need to sit on your hands. Do not trade it. Outside day. For an outside day, the current day high has to be above the previous day high, or the current day low has to be below the previous day low. Notice this part of the candle right here is outside the previous day's range. That is why it's called an outside day. Now, let's actually understand what this means. Outside days mean that price is trending. So let's look at it. In here, this little box right here is what we call a range. So I'm just gonna mark it with an R. But once it breaks out, that is when we have T, okay, or trend. This is where the money is made. Most of the money made in the stock market is when a stock is trending, okay? Trends equal Gucci bags filled with money. Remember that. Remember how we talked about the Gucci snake? This is the Gucci snake in here. We don't like snakes. They bite and they hurt. The Gucci bag filled with money, we like that. So here's an example of intraday price. We can see price is above the previous day high. Okay, so here's the previous day high, and notice it's above. You can see it's kind of forming a bit of a range here in the pre-market, but as soon as the market opens, it holds the gap and price trends all day. So what does an outside day look like intraday? We can see that the market gaps up on this day and kind of forms a choppy range pre-market. But then as soon as we get off the open, we trend all day. Imagine for a second, you bought calls right here and you just rode them all day. You literally, all you had to do is look at your phone, buy calls, and you make money. That's how simple it is, but it's essential to know we are above the previous day high. We are above the pre-market high. Therefore, it is an outside day. Think of the daily candle. Okay, the daily candle looks like that. So the trend is up. How do I use this to make money? Everyone wants to make money trading, so let's get into it. I'm not going to hold back here. Order to trade effectively, you need to have the correct daily bias. And I'm going to explain to you very simply on how to actually have the correct daily bias every single day. When we have a bullish daily bias, okay, it is a outside day that is going up. Therefore, the trend is up. Therefore, we are going to buy calls, and it is a bullish outside day, okay? If price is breaking the highs, it is going higher. Therefore, the trend is up or bullish, because in a bullish trend, it means what? We are going higher. Bullish daily bias. Notice the candle broke above the previous day highs, okay? So this part here broke above. So it is now a bullish outside day. That means we are going to buy calls. If you ever get confused, just remember, if we're breaking the highs, the stock is going higher, okay? And that means you want to buy calls because you're bullish. And vice versa, we have the bearish daily bias, okay? So we break below the previous day low because we're going lower, the trend is down. If you can memorize these two patterns, you will always have the daily bias correct almost every single day. It's easy. You just have to wait for structure to break and get paid. We can clearly see this is an inside day. We were within the previous day's range, okay? Within means inside day. This is what we call chop or the Gucci snake pattern. So what do we want to happen? We want an outside day to form, okay? So here's the previous range we drew earlier. This is the Gucci snake. Now recall back to our last slides is once it breaks down, this is when we get trend. We can see it broke to the downside, meaning we're going lower. The trend is bearish and we're going to buy puts. This looks like intraday. We can see that price is below the previous day low. Remember on the daily, okay, this is what it looks like. So the trend is down. We are looking to buy puts here. Let's see what happens. Price decides to go down and to the right, meaning the trend is down. Remember what we drew earlier, okay? The trend is down. This means that we're going to buy puts. But your question is, well, this looks fantastic. There's no way you would have caught this move. So where do you enter? It's really simple. I'm going to show you. All we have to do is add a magical line to our screen, okay? The magical purple line, aka the 8 EMA. All we do is wait for a pop up to the 8 EMA. Okay, we can see the 8 EMA right here. Here's our pop, and then we enter puts there. Why? We cannot chase this on the way down. We are traders. We are risk-minded, okay? We are always afraid we're going to lose money, and we don't think, oh, wow, I just missed out on so much money. Where is the highest probability risk-reward? It is a bounce off the 8 EMA or a rejection off the 8 EMA. Remember, if it's below the previous day low, it's below the pre-market low, it's below the 8 EMA, okay, it's going lower. So we're going to buy puts. Remember, this is extremely important. So now I'm going to ask you, do you think you got paid here? Absolutely. Puts went 194% off the rejection off of the 8 EMA. It's really that simple. All you have to do is be patient and trust the magical purple line. The entry and exit were alerted in real time. You can see, here's the entry right off here, off the 8 EMA, and here is the results, entry, exit. Simple, easy, breezy, cover girl. Now, you're probably thinking to yourself, Ellie, that was just luck. That was a news candle. Something came out. It was lucky. Sure, let's see if it was just luck. Okay, So here we go. Now we have another inside day forming. Okay, remember this is a choppy range in here, inside day. So what do you want to happen? We either want it to break to the downside for a downtrend or break to the upside for an uptrend. Let's see what happens. We get a bullish outside day. What does that mean for us? That means that the trend is up, so we are going to buy calls. Now let's look at price intraday. We can see choppy, 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 inside day action. It breaks to the upside and we trend. Think back to what we talked about for the outside day. Okay, if the outside day looks something like this, okay, the price that happens in this range is going to be choppy and price above is going to trend nice and clean. And you can see that's exactly what happened. Let's look at another example. This is more of a bunch of inside days together or a bull flag. Now, let's see what happens. We ideally want this to break to the upside, so we get a clean uptrend. But if it breaks this range to the downside, we are going to play this gap fill here. Let's see what happens. We get a clean break to the upside. Let's look at this intraday. So here's the pre-market high, the previous day high. So it breaks the pre-market high and look at the trend here. Okay, that is a monster move. Okay, that is a life-changing amount of money, especially when you have a small account. This is an A+ setup. Okay, comes out, chops a little bit, moves up, chops a little bit, and then boom. Big breakout. Okay, these are the big breakouts you want to capitalize on. These are A+, these are high probability trades. So we can see here we are forming an inside day. We are within the previous candle's highs and lows, therefore we are chopping. What do you want to see here? We want to see a break of structure to the downside, okay, for a bearish trend to continue. Let's see what happens. We can see we have a clear breakdown of the double inside day. Remember, choppy range. Now we have trend. Let's see what this looks like intraday. We can see we break the previous day low, and this is an all-day fade. All you had to do is buy puts early this morning, and you'd come back and look at your phone a couple hours later, and you'd be up 200 or 300%. It's really that simple. But just remember, you create your own luck. Self-discovery is the only way to profitability. But before I end off this video, keynotes here, daily range breaks are A+ setups. These are my favorite A+ setups that you can use every single day to build a small account. Range is defined as a previous day high or lows. Okay, that is the range of the daily candle. And lastly, make sure that you are familiar with the LE model. If you don't know what that is, go check out my full 2025 trading guide. And very last, patience always pays. If you can just stick to playing these outside days, you will make so much money you won't know what to do with. That is all.